Hi, thanks for joining me today. My name is Chris Januski. I'm from the Wasiczko Agency. We are a family-owned and operated property and casualty insurance agency. We serve New York, New Jersey, and Connecticut. We've been in operation since 1963. So what's that mean? What do we do with property and casualty insurance? So we do personal and commercial. For personal lines, what we can offer is home, auto, umbrella, condo, and co-op, renters insurance, motorcycles, RVs, classic cars, and special events. In regards to commercial insurance, I can write liability, property, business owners, business auto, professional liability, crime policies, workers' comp, and disability. All right, so it's October, and today we're going to discuss what you need, why you need an insurance agent as a trusted advisor. We're going to talk about some of those scary stories of insurance claims and what you can do to protect yourself. All right, so I'm going to start out with some stories about Mike and Susie and Johnny. All right, so Mike and Susie are in their 40s. They're homeowners. They have a small business that they run, and they have a son named Johnny. Johnny's their 17-year-old son. So Johnny decides he's going to go out to dinner one night with his friends. And he goes to this restaurant, and honestly, the service wasn't that good, and he wasn't pleased with it at all. So he went on social media and told everybody how terrible it was, and he bashed this restaurant terribly. He exaggerated what went wrong, even threw some lies in, and really wrote this terrible review for this business. Now he's 17. He can't really be held legally liable for anything. But this business, this restaurant, this one terrible review had such a negative impact on them and caused so much loss of their business that they had no other ways to deal with this to sue to get money back for the lost business. So they decided to sue Johnny, but since he's a minor, they're going to actually sue Mike and Susie, his parents. So what does Mike and Susie have to protect themselves? Surprisingly, their homeowners insurance policy, if they have personal injury added as an endorsement to that policy, that personal injury would cover them being sued for could potentially cover them for libel and slander based on what their son wrote online. So this is why it's important to have an advisor that you know and trust and can talk to you about things that you probably wouldn't think of a possible claim. That's what I can do for you. I can sit down, go over a policy, and make sure that you have the policy written to your needs. When you contact me, you're not just some number. You're not reaching a call center. You're reaching somebody in our agency where we know and like and trust all of our clients, and they do the same for us. So we're going to continue with Mike and Susie here. So they've got a decent home. It's a two-story home with a basement, and their basement's finished. And in that finished basement, they've got a full bathroom. It's like a little den down there, TV room, and a full bathroom. And something happens, and the water gets, and the sewer line backs up, and it backs up into their finished basement. And now they have this water going everywhere. It covers the entire basement. It's probably like 1 to 2 inches. So you're like, oh, 1 to 2 inches. It can't be that bad, right? Well, it was carpeted, and it was fully finished. So all of that carpeting is now destroyed. The padding underneath it is destroyed. There's mold from all that water. The molding around the bottom of the sheetrock is all destroyed. The sheetrock itself, the bottom couple inches, is all destroyed. And this is all from water being backed up from their sewer, or from the toilet in that finished bathroom downstairs. Now, your homeowner's policy excludes this type of water damage. But again, there's an endorsement that you can add onto the policy, and it's not that much money to protect you for this type of loss. Now, does everybody need this? Potentially not, but this is why you need to sit down with an agent that can talk to you, because insurance isn't one size fits all. And we're going to get you what you need, but how do you know what you need if you don't have that discussion? So please reach out to me. We can have that discussion. Make sure that you're getting the proper coverage for what you have. So let's go back to Mike and Susie, right? So Mike and Susie, they bought this house. So like I said, it's a 2-story house, and we're just going to use some hypothetical numbers here. So they bought the house for $400,000, and they only had to get a mortgage for $300,000. They had a lot of money to put down, 25% to put down. All right. So now they're trying to figure out how can they save a little money, because that's, it's a lot of money that they just put into this house. What can they do for savings? And all they're seeing is dollar signs. They're not seeing what the insurance policy can do for them. All they're seeing is, this is cheaper, so I'm going to go this route. And nobody was able to explain to them why cheaper isn't always necessarily better. And that's what I can do for you. So the things that you own inside your house, your personal property, there's 2 ways that can be covered with insurance. It could be either actual cash value or replacement cost. Now, let me explain. So they were trying to save some money. So they said, okay, well, we're gonna have actual cash value. What happens is there's a fire in their house. Now, the fire did not destroy the entire house. It just, it was in the kitchen and it spread to the living room next door. But the fire department, thank God, they were able to get there on time. It wasn't a total loss, but there's a lot of damage to the home. Now, their personal property, everything they had inside the kitchen and the living room there, it needs to be replaced. But they were trying to save money, so they went with the actual cash value and not the replacement cost. So what's this mean? It means that their sofa, that it was a brand new Lazy Boy sofa when they bought it, it was $2,000. But now it's 15 years old and it's depreciated. And it's not worth $2,000 anymore because of that depreciation. If they were to sell it today for what it is before the fire, maybe they could get $500 for it. And that's all the insurance policy would cover, is that $500, unless they added this endorsement to get replacement cost of their personal property. If they had that on there, what that would do for them is, if anything was lost in that fire and it had to be replaced, it would replace it with something of like new and new with like quality. So you're not going to lose the value of that depreciation. All right, we're going to stick with this same topic now of that fire. So that fire destroyed their kitchen and their living room. And like I said, so the home, they bought it for $400,000. But the mortgage is only $300,000. And by law, the mortgage company just wants their $300,000 insured. If the home's worth more than that, in this scenario, the bank didn't care. They just want to make sure that they could get back what they owed to the bank. So they decided to insure the house for $300,000. That's all the bank required. It wasn't the full value. Now, why could that be bad? Let's say this fire was only $50,000 or $100,000 worth of damage. It's well within the limits of the policy. But insurance policies have this thing where if you're not insured to value, they can actually pay you a percentage of a claim. They're not going to pay you the full amount. The insurance company wants you to have your home insured to what it's actually valued at, what it's worth. So when you insure it for less intentionally, they're going to only pay you a percentage of that claim. They're not going to pay you 100%. All right. So again, it's important when you're talking to an insurance broker or your agent, talk to me. I have a tool. It's called a replacement cost calculator. Basically, what it does is it takes the parameters of your home. It's going to take square footage, the year it was built, any upgrades you've done in terms of utilities, what type of heat you have, and it's a computer program, excuse me, compiles all this data and figures out what it would cost to replace your home. And that's what the insurance companies are going to look at to see if your home is insured to value or not. So important to sit down, have that discussion, make sure that everything in the home is properly on there and that you're covered. God forbid it's a total loss. We want to make sure that they can rebuild the home to what it was before. Right, so back to Mike and Susie, right? Mike and Susie, Mike's got this business meeting they need to go to. and he needs to get all dressed up for it. He went out and he bought a very expensive suit. It's like a few $1,000s for this suit, and it's he didn't want to wear it to the interview there, the meeting that he was going to. So the suit's in his car and it's hanging up on a little hook, and he had to run some errands. So he runs inside to the store and leaves that in the car along with his computer and some other things for this meeting that he's going to. And he's inside the store and somebody decides to break into his car. And they break into his car, they stole his laptop, they stole his brand new suit. All of this stuff is now gone. Now, say, well, Mike has auto insurance. That's going to cover that, right? He has full coverage. He's got comprehensive collision. He's got everything he needs. But your auto insurance does not cover personal property. So you say, well, how do you cover that stuff, right? What you do is you use your homeowner's insurance. Now, this is important because some homeowners policies, they exclude off-premises theft, being that this suit and this laptop were in a car, right? They weren't at his home. Some policies are going to exclude that coverage. Now, if for somebody that has valuable items away from the home on a regular basis, this is a coverage that's necessary. Again, this is why reach out, have a discussion. Make sure that you have a policy written to meet your needs. So contact me for a policy review. We'll go over what you have. If it's a good policy, I'll let you know. If not, we can address where some coverages need to be. All right, so back to Mike and Susie. Mike and Susie, they've had a good year. Things are starting to open back up, and they decided to go on vacation. They're on vacation, and they're at this glamorous hotel, and they're loving it, loving life, having drinks by the pool. And they were going down to the pool that day, and now Susie noticed that her wedding band is gone. Now, it's not a cheap band. It was a $10,000 ring, and she doesn't know where it was. She doesn't know if she can't remember if she took it off in the hotel room. Maybe it fell down the sink. Maybe she took it off and somebody stole it. Maybe it just slipped off her finger and she lost it somewhere, but she has no idea where this ring is. She just knows that it's not in her possession anymore. Now, a $10,000 ring, and it's off premises. Now, both of those are not going to have the potential to not be covered by your homeowner's insurance. But what can you do? You can have valuable items or scheduled personal property added to that homeowner's policy. And most companies, when you do that, it gives you worldwide coverage, so you're not stuck at your home, or even the US for that matter. It's going to give you worldwide coverage, and it'll cover things of a disappearance. You don't have to have a police report to prove that it was stolen. Now, this isn't all companies. Again, this is why you need to reach out and talk to me. Let's have a discussion about what you have. Make sure that you have the policy that fits what you need. All right, so Mike and Susie, right? Their son Johnny. So what's their insurance there for? It's there to replace the things they have, but it's also to protect them when accidents happen, right? So I remember Johnny. Johnny's a 17-year-old boy that's in high school. He's a young man. He plays football, but at 17, he's really an inexperienced driver, but he's on his parents' insurance policy. So Johnny's driving one day, and they're in this. He's going down the road. Him and his friend. They're 17. They're loving life. They're just leaving football practice, and they're on the highway. And the speed limit's 55. And he's not going too fast. He's going 60. Johnny's he's pretty good driver but he's inexperienced. So he's going down the road and he sees 55 and he comes up to the stoplight and he's a little ways away and the stoplight turns yellow. He's like, I can make this. So he guns it, right? He hits the gas and keeps on going. And he gets up to 70 by the time he gets to this intersection and the light turns red. Now there's a car sitting there at the perpendicular road that sees the green light, and they just assumed that's green. I'm not going to look both ways. and they go straight through the intersection. Johnny slams on the brakes, but it's too late. He slams into the side of that car. You know, this was an accident. He T-boned this car. And there was a child in the back seat. And that child, they didn't die. Thank God they didn't pass away. But that child was great. It was injured and is going to be living with these injuries for the rest of their life. These are permanent, lifelong injuries. Now, this was an accident. Johnny didn't leave the house this morning and say, you know what, I'm going to be a reckless driver. I'm going to go cause an accident. I'm going to ruin a family's life. That wasn't the intention at all. He's a 17-year-old kid that misjudged something and made a mistake. So the family that got hit, obviously, they've got all these medical bills that they're going to, you know, they're going to have to end up suing to get this covered. So they're going to sue the auto policy, right? So Johnny, he's the driver, but it's really Mike and Susie's policy. Now, Mike and Susie, everything that they own is on the line. Everything that all of their possessions, because of Johnny was driving their vehicle on their policy. So this is why it's important to have an umbrella policy. So that umbrella insurance, what this is, it's an extra layer of liability insurance. So if somebody sues you, so let's say their auto policy covers $250,000 per person or $500,000 per accident. This $1 million liability policy sits on top of both of those policies, and it's an extra $1 million. Now that money isn't going to fix those injuries, but in the court of law, when they sue, it's going to prevent Mike and Susie from losing their home. Hopefully, it's not too big of a judgment, but that $1 million policy has the ability to let them sleep a little better at night for when accidents do happen. All right, so why did I go over all of this today? It wasn't to scare you. It wasn't to sell you something you don't need. Look, I believe my job as an agent is to educate. I want my clients to know what's available. It's the worst feeling for me if somebody gets has once put in a claim and then I have to tell them that they didn't have coverage. If they didn't have coverage and they didn't know that the coverage was available, it's a terrible situation. I want my clients to know what's available and want them to make an educated decision based on their circumstances. You don't need all the bells and whistles available in every policy. That's not for everybody. But you should have the things that are applicable to what you have. So reach out to me for a policy review. I have no problem sitting down with you, looking over the policy that you have. And it's a complimentary service that I offer. If it's a good policy, I'll let you know. If it's a policy I can't compete with, you know, I look at the premium and say, wow, you've got something great. I can't do anything this year. Please come back to me in 11 months. We'll look at it again when it's up for renewal. I would love to be able to have you as a client, but there's nothing I can do for you right now. You may want to look at these couple of things with your current policy, but you have a good policy and there's no reason to switch. I would love to have you as a client. If you want to come over as a client of mine, you know, that's one of the things we pride ourselves on, being there since 1963. You name me a client, I can tell you where their folder is and tell you about them. That when you call our agency, you're not just a number, you're part of a family. So I'm not going to try to sell you something you don't need. I believe in building relationships with my clients, and that's based on trust. All right, so that's it for this week. I hope you can join me again next week. If you want to reach out to me, scan the QR code, get my contact form. You can reach me in my office at 914-968-1344, or you can email me, chris@wasiczkoagency.com. Thank you for joining us today. Look forward to hearing from you.